Progress.
Hello, everybody. This is the Beach Trader, you guys, and you know we're living that freedom lifestyle. Let me show you guys how to maximize your profits with the bot. This is more of an advanced. This is the fourth part of the bot training videos. So you guys should know a whole lot about the bot, but I'm about to take down the most important stuff and some of the new things that I've been developing, and we're gonna just present it to you guys in a way that will help you guys maximize your profits and lower your losses. Here we go. So it is called How to Maximize Profits with the Bot. That's a funny thing. And let's get right into it. So we're going to go over the do or don't. You know, are you going to get in the trade or should you not get in the trade the bot calls out? One of the things that you have to always look at the spread. You have to look at if it's in consolidation, and you have to look at the news events and the market times. You know, those are things that where you shouldn't or should get into a trade. If it's not those four things affecting it, then it's going to be a beautiful trade. You could still get in the trade and just set it and forget it um, if you want to. But I always look at those things right here. And then the signal. We're going to go over the signal for you. Like, what is each part of the signal that you're getting from that Telegram signal? Like, what does each part mean? I'm going to break it down to you where you can really understand it. And then I want to talk about stop loss. I'm going to go into the market and kind of tell you about different things that you're going to do with your stop loss. Um, and there's three different ways that you're going to use it. And then we're going to talk about the take profit, right? We always see on the bot there's take profit one, take profit two. What should you do? What does the bot do on the automatic? Because that's why it's shooting out too. And I'll explain all that to you. Let's get right into it, you guys. So for the do or don't, the spread is really important. You know, what are the best spreads and worst? Well, we pick the best spreads for you. All the trades that we do: Euro USD, Euro JPY, USD JPY, XAU USD, which is gold, US 30, NDX 100 or NAS 100, the SDX 500, and then we got Tesla, Amazon, and Apple. Those are the trades that we stick to. The worst spread is Bitcoin, and that's another one that we do. So you have to be careful if you take a Bitcoin trade. Let's go over some of the spreads and what it's going to look like. So if you're trading on your phone, right here, you see that this is Euro USD. What's so weird about this? This is today actually, but it says $1.06,186 on the green line. And then you look at the red line and it says 1.06197. So what you do is you subtract the totals. And we notice that in between those lines is 11 points. So when you get into this trade, you're going to be 11 points or 11 pips down in the trade already. That's why when you push the button, you start losing money almost on every trade. Now, this is really weird for Euro USD because Euro USD is probably like one pip away at the most. Sometimes it's broke even. So I found it right here. It was like a fast movement and it made the spread kind of bad, but that's still really good compared to, you know, other things like Bitcoin. Bitcoin right here, the spread is really huge. If you look in between the red and the green, it might not look like it's spaced out, but you're talking about over, you know, $22. $22. So you're gonna go in this trade on a one volume trade, and you're gonna be down $22 immediately. So that's why I'm trying to tell you, be careful, because sometimes Bitcoin could be $60 different, and you'll be down $60 to $80 just getting in a trade, and you'll say, "Wow!" And you're just waiting to make $100, but you should never get into a trade if you're trying to make $100 when you start down $60 to $80. Okay, let's look at some more. This is gold right here, XAU USD, and we noticed that it's down 12 cents. So that would be 12 pips. So you would be down $12 if you were doing one volume. So that's not bad compared to what Bitcoin just showed us, right? Here you go, Euro USD. This is the second snapshot. This is on the next candle. The first one you seen was like 12, pips off. Well, look, it's 2 pips off. You got 189 and 187. So when you get in this trade, you're down like $1, $2. No big deal. It doesn't really matter to you. So the first thing you look at when you're taking the trade is how big is the spread? How big is the spread? All right, this is Euro JPY, and I just try to zoom in so I can show you guys. This is what? How many? You know, we can't hear you right now. There's people on here, but you would say that's 5 pip spread. You look at the end and it says 780, and the other one says 775. So if you get in, you know, with one volume, you're going to be down $5, which is not bad compared to what we said with Bitcoin. You were down like 20 something dollars, and sometimes up to 60 to $80 if it's moving really fast. Just be careful on that. Let's talk about consolidation. When you get into a trade, you need to look at the graph every time. You know, unless you're just setting in to forget it, and you know you're just going with the 90% rule, or the bot's going to win 90% of the time and you don't care, you know. But you could even get it to better win results if you look if it's in consolidation and don't take trades. This is extreme consolidation. I circled it in red. Do not take this trade. If it called out a trade right here, you're not going to make that much money. You can see from the blue line at the top right here to the blue line right here, this is about $4 difference from the lines, but it's so consolidated, you're barely seeing any red or any green. This part is a little better, but most of this is just like super skinny lines that you should never trade, okay? Let's look at a okay trade. This isn't the perfect trade, but it's an okay trade, right? This is from today. The bot said to take this trade going down, and what you notice is, yes, you won down here. You might have got out right here, or you just, you know, kind of broke even or won a little bit of money because you did start up here. So yeah, you could have won money, right? Could have won money over here if you stayed in, right? Then it tells you to get in this trade right here, and yes, it goes up, but how much does it really go up? You know, the bottom of here looks like 1984.50, and it goes up to 1985. No, that's 86. So yeah, it did. It went up about $2. You made $2 in profit, which is not bad, right? You don't really want to fool around with the other trade because you're only making like $1 profit up or down on the dollar in gold. So this is a pretty good trade. It gave you the down, it gave you the up today on the 15 minutes. So it is a good trade. If we had it on the 5 minutes, you would see that there would be no money in it. But if you're looking at the 15-minute scale, there's some pretty good money at $2, okay? Let's look at another one. This is another one that came out today with gold, and this is even better. You see these big candles moving up and down, right? You see how the Bollinger Band is spread a little bit more from here to here. You can measure that, and that might be about $6-7. So, you know, that's big money right here from the blue here at the top to the blue at the bottom. That's 1978. That's 1987. So that's $9 spread on the Bollinger Band, which means, you know, when you grab this one going down today, you made a lot of money. This might be $6 that you made right here, right? You got in right here. This might be about $4 you got in when it went down here. That's a lot of money on gold. You know, that's if you got one volume going down, you know, 7 or 6 right here, that's $600 to $700. Going down right here for, you know, $4, that's $4 or $400 you're going to make right here. So that's good money. So don't get in it if it's too tight because there's really no money there. And if it goes the wrong way, you can lose some money, right? But if you put in the bots, take profit and stop loss, you're not going to lose that much in consolidation because the stop loss is going to be really tight. Okay, so you're not going to lose that much. So don't worry about that. Just wanted to show you guys how to maximize. Let's look at news events. Okay, to look at news events, I need to come out of here and do not trade in times on red folders. 1 hour before they come out and 2 to 3 hours after they come out. Well, what does that mean, Beach Trader? Well, if we go to Forex Factor, we can see today red folders. So if you're trading GBP, you do not trade GDP if the bot calls out something at 5 a.m. or if it calls it at 4 a.m. your time, and then you shouldn't get in this trade to about, you know, 7 or 8 a.m. with this trade right here. Our gold came out with the unemployment today. It's Thursday. It comes out every Thursday. Well, if the bot calls something out, it doesn't matter what the bot calls during this time because the unemployment is going to make it go up or down just according to this news event. It doesn't have nothing to do with what the market's been doing. So don't get in the trade an hour before 5:30. So don't get in at 4:30 and don't get in till at least well, on unemployment, you should wait about 3 hours. But the normal red folders, 2 to 3 hours is really good. So you shouldn't get in this trade till about 8:30, maybe 9 o'clock, and avoid trades during this time on USD and GBT. Trust me, it will help you out. Now, 50% of the time, you got this trade and it's just going to rocket up to your take profit and you're going to win. 50% of the time, it's like a coin toss. You're going to hit the stop loss. So depends on your train of thought. I kind of, look at the news and I don't trade the bot during the news, only these red folders. So that's today. We look tomorrow, there's red folders tomorrow at what time? 5:30. So this is a time where you want a news trade and not just trade off of the bot. Okay, these are called news events right here. There's another one at 7 a.m. Avoid trading the USD against gold or against Bitcoin at these times. The US 30, most of our trades have USD in them. Avoid trading them if the bot calls something out. Win the news. So where do you look at the news? You go to forexfactory.com and look at the news. If you want to look at gold news, you're going to hit Metal Mines right here. You just scroll over the Forex Factory, hit Metal Mines, and sometimes it will tell you a red. They'll have a red thing right here. It's green. I mean yellow. So you don't have to worry about it, okay? But if this was red, then you would have to avoid during this time right here. Don't worry about that too much. And this is on Bitcoin. You see Bitcoin is having problems right here. Same thing on Friday. There's going to have some big major problems trading Bitcoin around 5:30 to 7 a.m. Just avoid, the hour before, 2 or 3 hours afterwards, and then get to trade. No problem. Well, that's basically what you really need to know on the Forex Factory to take care of yourself and protect yourself. Yesterday, we had some news. It said that the Euro banks are closed down. France, French bank, and Italian. So I would avoid trading the Euro during this time. The whole day is closed. You don't know what's going to happen. I would just avoid it. We only take a couple trades that have the Euro in it. I would avoid trading it. And on holidays where the United States gets a gray folder, I would avoid trading the USD because it's like nobody knows what's going to happen. Banks are closed. Big hedge funds are closed. Everything's closed. So you're just playing against like little guy versus little guy. And there's no rhyme or reason to what's really going to happen on those days. So take my advice on that and be very, very careful when you're trading that, okay? The next thing that I want to talk about is market time. See, market time is very important when you're trading because there's going to be different times where it's going to be volatile or not volatile, and you want to know. So what are the volatile times? Let's go, and everybody can go to this website. It's called babypips.com. It's tools, and it talks about the Forex market hours. So this is our time right here. We're at 7:54, and you can move it back to find out when stuff opens. So Tokyo time opens up at 5 o'clock. And you can see at the bottom right here, there's not that many people trading at 5 o'clock when it opens. It starts trading good right around here, 6:30, 7 o'clock, and then it kind of starts going down, right? I'm looking on the bottom right here. This is what you're looking at. So what's the best time to trade? Well, London time is good. It's green, right? It's starting to go up. You see it. And then when New York hits and London time overlap, this is the best time. The best time is right before London shuts down and the New York session is rolling and the West Coast of the United States is rolling. So what time is that? That's about 8:30. 8:30 in the morning, our time is the number one time to trade. And man, the things go up, down, all around. Really good at that time. The fastest movement you can see it start moving up is right here at that 5 o'clock, 5:30 mark. This is when it really starts getting really interesting during our Pacific Standard Time. That would be, 8 a.m. on the East Coast. And the best time to trade in the East Coast would be about 11:20 a.m. Our time on Pacific Standard is 8:18. So the London time, once again, is what time? 1 a.m. Pacific Standard Time. New York opens up at what time? About 5 a.m. Pacific Standard Time. And Tokyo opens up at 5 p.m. our time. Now, what you know is 5 o'clock is when the market what? It's when it closes down. So Tokyo, we can't even trade during Tokyo's awakening. We got to wait about 40 minutes to an hour, and then the markets open back up. And around 6 o'clock or something, that's when people start trading again. And then it levels back off on the bottom. And so look at this thing, and you can change the time frame right here. This is Los Angeles. We're on the West Coast. Well, I could change it to Chicago, right? If I want to look at that time, or I could change it to New York time and find out what the best time. New York time, the best time is 8 a.m. You know, London time is 4 a.m. for East Coast time, and Tokyo time is 8 p.m. So Sydney time, I don't really worry about. It's not really, it's basically trash. It's funny because if you look at, Sydney time, this one right here, and if you look at the bottom, the whole time that it's alive is when the market is red and not in dead, basically. So don't worry about that time, okay, you guys? But those are the times where things are going to get real tough for it. The bot calls something out at right when it opens New York session or London session. It's going to get very, very chaotic during that time. It goes up and down really fast. Be careful of that, everybody, okay? All right. Let's go to the next part. This is the signal. We got signals, and we got a new part of the bot that has stop loss and 2 take profits. Okay, let's go over each part of this. So the number one thing is BTB means Beach Trader Bot. 1.0 means the first bot that I made. It's the one that's been most calculated, the one that's been most backtracked, the one that's been worked on the most. Okay, and this says candles what? M5 plus. That means that the candles on this are going to be 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, or 1 day. Now, and this is Jan's graphics right here. He's a programmer. He likes these little things, so don't even ask me about that. Let's go to the next part. The next part is it a buy or a sell? Well, you need to know if you're buying or selling the trade. Here it is right here. Okay, and then there's something called 3, 4, 5, and 6 point trades. Now, we only do 5 and 6 point trades, and they used to be 3 to 4, but we're really calculating 5 to 6 things. A 5 point trade is a 90% trade. A 6 point trade is a 90% trade too. Don't get it confused. They're both going to be 90% trades. The one that's a 6 point trade means everything right now is correct, right? The 5 point trade means everything's looking good, and there's one thing that's not there, but we're still going to take the trade because the other thing might come immediately after that, okay? So that's all you have to worry about. And then the no trend just means that it's in a no trend. So the bot will either take trades in no trends or take a trade during a trend. So you don't really have to understand the no trend or trend. It really doesn't have too much to do because the bot, it might go out of a trend really quick. And that just means that it's had like a 70 to a 40%, uptrend or downtrend. And we call that a no trend, okay? Anything over 70% on a trend is going to be considered a trend. So that's really, the calculation on that doesn't really matter to you. You just want to take the buy or sell right here, because if it says buy, you take a sell, you're doing the opposite of what the bot's telling you. Next, the bot trades 6 different pairs. Okay, on this bot right here, this is bot number 1. This isn't the stock bot, so it's not going to trade the other ones. It's only going to trade Euro USD, US 30, Bitcoin, XAU USD, USD JPY, and Euro JPY. Okay, it's very important that you trade the trade that it says. Okay, sometimes we'll be stuck on trading Bitcoin, and it'll give out a Euro USD, and you just trade it thinking it's Bitcoin to buy it, and it's not going to work out for you because it's a whole different trades. Okay, why did we pick these trades? These 6 different pairs are traded over 90% of all trades taken on a given day. 90% of all trades, 95%. 90% of trades, is, let me be honest with you, are just Euro USD, the one trade. So the other 5% we put in here for you. And, these are the major pairs. And the major commodity pair is gold, and the major crypto pair is Bitcoin that we added on here. Okay, period. So this is the period. We know that it's an M5 plus bot. So, if it says M1, then that means it's only taking 1 minute trades. This is the M5 plus. So it's taking what? 1 minute, 5 minutes, 15, 30, 1 hour, 4 hours, and 1 day. And then this one right here, what does that mean? Period. H1. Well, that means hour one. That means a 1 hour trade that you're looking at right here. And this is symbolizing the candle time frame. The bot is looking at to take the bounce trade. So the more the time, usually you should stay in a trade longer. Remember that. So on average, when we looked at throughout history, when we live tested it, we noticed that 1 to 3 candles is the best time to be in the trade. In between the first candle, you can get out all the way to the third candle is on average. So if this is a H1 trade, that means that you're talking about staying in this trade for like an hour to 3 hours. And then if it doesn't do what you want to do, you just might as well just get out of the trade, right? That's how it kind of works out with the 1 to 3 hour average. You can stay in longer. We were looking at a trade 2 days ago in Bitcoin, and one of our students got out of the trade and he said, man, it didn't go where I wanted to. And I said, but it didn't hit the stop loss. And what we noticed that it actually did win for him and never hit the stop loss if he would have just stayed in. But it was like a half an hour trade. And I think it was like ended up happening about 6 hours later. So he got out. I like to get out at least at profit or let it hit my stop loss. I don't like to get out of a trade before it hits my stop loss. I like to get out in either profit or just let it hit my stop loss. That's the kind of person I am because I really believe in the bot. Let's look at entry. This is the entry number. It's very important because if you get a candle that is already counting and not brand new, the bot predicts the best entry for a trade based on the current candle. So right now, what we see on this trade is that it says 10:16 a.m. Everybody look at the bottom. It says 10:16 a.m. Well, what we know, if this is an hour candle, that it started at 10 a.m. The candle trade started at 10 a.m. So if it says 10 a.m., we know we got the best spot that we can get in. When it says 10:16, it might have already started moving in the direction and it might be out of place for us. It might have already gave us the money we should have got, if we got in at 10 o'clock at the best position maybe. So that's 16 minutes off of the trade. I would look at it and see how close it is to the entry before I get in this trade. If the entry is way far off, like let's say this is a buy, and let's say at 10:16 when this trade came out, it says 1983. Well, it already went up $1.50. I might say, hey, I don't want to get in this trade. But what you do see is take profit number 1 is at 1987. So that's $6 away. So there's still room for you to make money. You're probably going to make, $4.50 instead of $6 profit right here, which is still good because it's a long candle. Now, I like to get in on those fresh candles, the fresh time limit, and I'll show you something like that in a little bit. But you always have to look at the time on the bottom, and you got to make sure you get in close to the entry. That really matters. All right, talking about the time should always be taken into consideration. The closer the time is to the candle start, the better because the entry will be precise. So what does that mean? This is an hour, so it's going to be on 10 and 11 o'clock. If it was a 15-minute candle, the candle will come out at 10, 10:15, 10:30, 10:45, and 11 o'clock. Now, if it's a 5-minute trade, then it's going to come out every 5 minutes. So, well, why does that matter? Because you want to get it closest to when the new candle is. Everybody wants to get in on the new candle. Remember that. So if it's like 15-minute candle and you're getting in at the 14th minute of the candle, it's like that trade might be over with. I'll show you something with considering that. All right, let's look at the stop loss. This is the new part of the bot where it's going to give you a stop loss. So a stop loss order is a type of trading order that's designed to limit a trader's potential losses on a position. It automatically closes the position when the market price reaches a specified level, allowing traders to manage their risk exposure and protect their investment from significant loss. Every time you take a trade, always put a stop loss in because you don't want to get caught on a news cycle or something that happens real crazy in the market and you lose your whole account on one trade. It happens. Trust me. Let's look at the new part. Take profit 1 and take profit 2. So take profit 1 and 2. It's a type of trading order that instructs a broker to close a position once the market reaches a specified profit limit. So once it hits this, take profit 1 or take profit 2, whatever one you set in, it's going to close it out and you're done. This order type allows traders to lock in their gains automatically without having to constantly monitor their position. So this is a way for you to set it and forget it, stop looking at it, get to doing what you're already doing. All right, talking about this is a 15-minute candle. And what do we see down here? It says 9:29. That means that this candle came out at 9:15 and 14 minutes later is giving us a trade at the end of the candle. We got to make sure that the entry is still a good place where it is, because this trade's been going on for a whole candle, almost the end of it. Okay, that was a trade I seen today, and this is another one. Beautiful. It's a 30-minute candle trade period, M30, and what? It's on the dot, 10. You could always know that every trade is going to be perfect if it's on the hour. The hour is always where the candle refreshes no matter what. You don't have to do all the mathematical calculations. If it's 5 minutes, it happens every 5, 10, 15. If it's 15 minutes, it happens 15, 30, 45 on the hour. If it's 30 minutes, it happens at 30 minutes and on the hour. 4 hours, you got to be careful, because that candle could have been going on for 2 to 3 hours before you got that call. And so you really got to be careful on the 4 hours. And then the 1-day candles, they could be, 12 to 18 hours out of date. So you got to make sure the entry is right. All right, you guys just pay attention. Alternative. Let's talk about this, the stop loss. Set it and forget it. There's that one way. This is what the bot can do for you. You just put it in and you're done, right? You can look at the market first and decide, or you could have a set stop loss for each pair. So what does that mean? Let's look at the market here. And so if we look at right here with gold, we can say all times our stop loss is going to be $3, or we can say $5, right? We can set it. If the bot called out $2 and we look right here and we say, okay, it's calling the trade out. And if you look all the way to the right, it says 1980. And then you go all the way down to the bottom, it says 1976. So that's a $4 profit that this is going to make you right here. So what should, the stop loss be right here? Well, the bot is probably calling out a stop loss of about, $2 maybe right here. So $2 would be, right about here. Did it ever get here before it went down there? No, it didn't. So you would have had a good one right here. So sometimes you want to just get whatever the bot says and put it in real quick and you're done, right? Then there's take profit 1. Well, take profit 1 might have been $2. Okay, take profit 2 might have been $4. So you got to determine, do you want to take the take profit, the bigger one or the smaller one? So what the bot does, well, no, that's a stop loss. Sorry about that. We'll talk about that in a second. But the stop loss is going the wrong way. So you're only getting one stop loss and you're going to get out, right? This would be a $2 stop loss. Well, every time I trade gold, I always do $3 to $5, depending on how far the Bollinger Bands is. So if the bot would have called a $2 stop loss for me, I would say, well, let me add $1 to that. Let me add $3 to that. And I'll be way up here with that. That's my preference. But if you set it and forget it, just do exactly what the bot says, no problem. Okay. Let's look at, and these are just the trades of the day. Here goes another one, a down trade. It told us to go up right here. You see, if we would add a stop loss right here, and it went up here, and let's say we didn't get out and we stayed in the trade. Well, if the stop loss was $2, we still wouldn't have been out right here. This is about $1.50. We'd have been out if it went down here. So if you would have got in right here, you should have got in out up here somewhere, and you would have won right here, actually. But some people start freaking out because it goes down right here and they say, oh, it's getting close to my stop loss. Let me cash out. No, because it's still probably going to go up. Like right now, we just got a call for gold to go down. And you see that it's been going down this whole time, right? It's been going down for about 10 minutes since the bot called that out. And let's say we got in right now. Well, it already been going down. How many? It went down $1.50 already. So you just have to know, like, do you think it's going to go all the way down here? Should you get in? Should you not get in? Should you have got in the beginning? Yes. But now it's 10 minutes later and we're on a 15-minute candle. It's like, man, it might have already did a lot of the movement it's going to do. So that might have cut you out. Okay. So just look and be careful. But as we see, This is on gold. It went down, perfect. It went up, perfect, and now it's going back down. So the bot is on the money. This is on the 15 minutes. It's been hitting all day, down right here, down right there. And so we could always look like right here. This is a big money one right here when it told us down 7:30 a.m. This was on Tuesday. It went way down. So big money when you're just trading with the bot. My favorite thing to do. Okay, let's look at the take profit. So take profit is a whole different beast because when you take profit, okay, the bot called this right here. It went up to let's see, that's boom. It would have told you to get out about 60% up from where you got in to the top of, I could measure it because I'm one to program with the guy. So 60% up from here to the top of the Bollinger Band, which is $1.98. So 60% of $1.98 is probably going to be about a dollar, let's say $1.10. So at $1.10, that's take profit one, $1.10 on this trade because the Bollinger Bands are real close. So $1.10 right here. So the bot will take out 60% of profit right here. So how do you do that? You do a take partial take on your trade. So when you close out, it will ask you, to close. But what you're going to do when you close, you're only going to close out part of your trade. So if you're trading one lot, you're going to hit to close, and then you're going to change it from one lot, and you're going to change it to 0.6 lots. That's going to take out 60% of the trade. Now, when it goes all the way up to that 190, the top of the Bollinger Band, then it's going to take out the rest of the 40% for you. It's going to take the maximum amount out for you. Now, if you just let it go to take profit two, you would have made way more money because you had 100% of your money when it got to take profit two. If you do it like the bot does, and you take 60% out right here and you let it go all the way up and then it closes out the rest, that's also great. But all you do for that is you put in take profit two and you wait for it to go up to the 60%. And when you see it, then you take out that 60%. Now, what does the bot do that's so amazing? What the bot does is it takes it out at 60% because sometimes it starts coming back down before it goes all the way up. Like right here, it didn't touch the Bollinger Band. So it went so close, but it didn't. And then it went what? Back down. You see that? So obviously you would have won if you would have stayed in and touched the top up here. But right here, if you would have got 60%, then when it goes down to 10% of the trade, when it goes back down to 10% profit, it closes the rest of the trade. So at this candle, it would have closed out with 10% more profit for you, leveraging that 40% that you had in there. I know it sounds like wild mathematics and everything, but it's not that really difficult. The bot does that automatically on the auto bot for you. Okay, so what you want to do is decide, do you want take profit one that's probably right here? Do you want take profit two that's up here? And, the take profit, as we see, let's go back and we'll be able to see, what a take profit kind of looks like. So this is a take profit 1 and 2 on 30 minutes. So your take profit, you're going to get in at 0.524 for a sale. And so you're looking at about 300 pips right here. Okay. And then if you go all the way right here, you're looking at about 500 pips for it to hit this. Now, if you got the stop loss is what? It's going to get you out at about 200 pips of loss. So the take profit one is almost the same as the stop loss. And if you want to make extra money, like double, that means that if you have take profit two, that means you make double what you'll lose, which will even make you have a higher statistics than 90%. Because you might not win 90% of the trades, but when you do win a take profit two, it's like you could lose 2 stop losses. If you just win the take profit one and you lose the stop loss, then you're basically breaking even until the bot starts trading at a winning percentage higher than 50%, and then you're always winning money. That's why I set it up like that for you, so you can always win. I want you guys to understand that. Let's look at another one right here. And I want to show you guys this. Let's look at a couple of trades now that we've seen that. All right, right here. So we have 1 hour. We see that the take profit on a gold sale is what? Take profit is $6 up. But what's the stop loss? Look at this. The stop loss is what? $3. So you lose $3, but you win $6. So it's still 2-to-1 right there. And if you let it go to take profit 2, then you're gonna win what? You're gonna win $2 more, which means you won $8 and you could have only have lost, $3. So I want you guys to understand that let it hit the stop loss sometimes, because you're almost making double when you get take profit 2. Sometimes you make triple at take profit 2, and you almost make a little bit more double when you're at take profit 1. So let the stop loss handle itself. Some people, well, it didn't hit take profit 1 that fast. Well, yeah, because it's 2 times as big as profitable as the stop loss. So if you take 4 trades in a day and you win 1 of them and you lose a 3, you're barely even losing money. Let's go 6. If you take 6 trades, you win 2 of them and you lose 4 of them, you're breaking even. Do you understand that? So you take 6 trades, and you lose 4 trades and you only win 2 of them, you broke even. So sometimes when you lose, let it lose sometimes because you're winning so much more money than what you're losing. You guys have to understand that. Okay, I'm going to go ahead and take you guys to the part where everybody's going to be able to ask questions. And this is a beautiful part for me because sometimes it even helps me understand everything even more. So go ahead, you guys, unmute yourself, shoot away.
Quick question on the take profit too. If you come in late entry, let's say it's 1981 and a half. Let's say you come in at 1983. So you're already, $3 down. Do you adjust the stop loss down as well, approximately the same, or no? Just leave it and then just take profit two. And
No,
again,
never adjust this. It doesn't matter when you get into the trade, never adjust the stop loss, period.
okay.
Unless you're doing your own stop loss to where on gold you just do $3 to $5 every time. And then wherever you get in, you just go down $3 to $5. If you're taking the bot trade, no matter when you get in, if you got in later, earlier, whatever you think it is, always use that stop loss because it's always gonna probably get close to that. And that's what the bot is based off of that. The bot is based off of, it's not going to hit that stop loss. It's going to hit a take profit way before 90% of the time.
Okay. And better off to hit this top, let's take profit two if you come in late though. Taking the take profit one would be almost a win-lose with the same ratio, so it wouldn't be profitable. More likely to be profitable at take profit two if you come in late.
No, just don't be greedy. If it's an hour trade, look, you probably want to make on a gold trade, you want to make $1 to $2 profit on a gold trade.
Understood.
Okay, so if it's saying like $6 to $7, sometimes people will be in the trade, they'll go up $1 to $2, they'll get out. So sometimes when you're just trading gold, you just know when you want to get in and get out. But something like that, that's making you like $7 or $6 or something, just let it go to that. If you got in and it already went $3, for you, but there's still $4 left, just let it go at that $4. But keep that stop loss. You have a bigger chance to lose because it already came into profit so much. But always keep the stop loss.
Got it.
Mm-hmm. You guys shoot away.
On the candles. So if you come in on the first candle, and if it goes down a little bit on the first candle, and the second candle, let's say, it goes down a little bit more, the third candle is not as likely to go down as much again. Or am I wrong?
Yeah, that just the market. There's no predicting the market,
No way to tell.
but what we do with the indicators. So, unless candles and dojis and stuff like that, just stick with what it's already doing. That's what I would do. And if the trade just starts consolidating, just get out of the trade because there's no reason to be in a consolidated trade and just waiting for it to do something. Just get out. I would wait for it to go on a profit before I get out. You know, if it's just consolidated, it's just going up and down. Wait for it to go on a profit and take a $30, $40 or something, 100, get out of there.
Right.
Yep. I would never get out of a trade until it loses to take the stop loss. Like I'm not gonna get out of a trade in negative when it hasn't hit the stop loss. There's like no reason for me to do that
Even if
because
the
the
trade's negative $300, $400, $500, even if it's negative like
yeah
that.
because you took a trade that would probably on something like that it was supposed to go $600-700, so it might go down $300 before it goes up to your $600.
Gotcha.
Yeah, you guys far away. Hey Dave.
Hey, how we doing?
Oh, great man.
So let's say on a 5-minute trade and it comes out, do we want to take it right away or do we want to try to wait till it goes to entry or what's the best?
Yeah, on a 5-minute trade you want to get in right then and there.
Yeah.
Like you got to get in quick on a 5-minute trade. That's like you got to hurry and push the buttons. On a 15, I don't take 5-minute trades anymore. I take 15 and up because it might take me 2-3 minutes to get my phone out and do everything I got to do, and I'm still in a good trade. You know.
Hmm. Now, what if it's firing the bot's sending a bunch of different trades? Do you want to try to stay in the one you're in, or do you want to take more because your lot size is gonna say not enough money after a while. So
Yeah.
what's the
So
best on that?
yeah, with your lots, like if you're doing little trades, then you do up to 5 trades. If you're doing pretty substantial trades, like you shouldn't trade more than 2 at a time.
Okay, cool.
Yeah, the bot is set up like that. It will never take more than 2 trades at a time. The auto bot. Yeah,
Mhm.
good question. Anybody else have any questions?
Just this. This was helpful.
Huh?
Thank you for this. This was helpful.
Oh yeah, no problem. It's gonna be recorded and then I'll send that out because there's three videos. This is the end video, right? But if you look, let me take you guys to it real quick. So if anybody's enrolled in my Beach Trader, this is the Beach Trader YouTube. Let's see, my channel. And I got a lot of free
Hello,
videos on
everyone.
here for over the years that I've been recording. But what you could notice is if you go to playlist, there's the bot right here. There's 3 videos on the bot right here. If you click it, and the first video is a half an hour long, and then it has the second video is 29 minutes, the third video is 24 minutes, and then this video right here is probably like 45 minutes or something. So this is going to be the 4th video in the series. It'll be right after here, but the basics, number 1, number 2, it's teaching you a lot of good stuff. So let's go over, what it's talking about. So the Beach Trader is going to have the bot is going to have a disclaimer on the first video, how it got created, the back forward testing we did, understanding the signals, taking the trades, the different in the candle times, maximizing your profits, and then risk versus reward. And then now I'm going to have an advanced video on a little bit more like how to maximize your profits even more than this one. But even this video right here is going to teach you how to maximize. I think that's the 3rd video because it's going to talk about the risk versus reward stuff. So you get all that. So this is something that everybody that gets the bot needs to watch these videos because without these videos, you don't understand everything about the bot. Some people didn't know that how long it took me to make the bot and that I got a professional programmer making the bot with me. This isn't just something that I just came up with because I invented or God invented a strategy through me and I just came up with this bot. Like this is a real bot. This isn't like the ordinary. There's some people that got real bots like this, but most bots are losing money and it's just somebody came up and they put something together real quick, some software through MT5, and they're trading on it and it's not doing nothing. This is like something that me and him really like strategized. Took us months and months and months. We back tested it, front tested it. I didn't know how to back test without the programmer. I didn't know how to, beta test. Remember, Dave, when I let people trade for a while. Remember that for free?
Yep. Uh-huh.
Yeah.
And
So that was
you,
like the beta testing. And then now, we're in the market right now. So there's been a lot of testing on this bot. This isn't something that I just flopped together out of nowhere. And, so, yep. So I'm glad everybody got to see this, and hopefully this really is going to help you guys, strategize. But all you have to do is go to the Beach Trader HFX. This is a Beach Trader bot right here. So Beach Trader and bot and sign on to this, and you're good. And then you can go to all the playlist and all these videos that I
Hello,
have.
everyone.
This
This
is
is
what it
Beast
looks
Trader.
like,
I'm gonna tell you today how do
you know. And so there's always videos that are coming up here. There's testimonies of people doing shorts and different things. So love for you guys to kind of check out this channel. And this is something that I'm giving everybody for free. And it really helps you guys. So yep. Does anybody else have any questions? If not, we're gonna close it down and record this tonight, and it'll be out tomorrow. I'll put it in the back office for you guys, okay?
Thank you, man.
All
Great.
right.
Thank
God
you.
bless everybody. You guys have a good night.
You too.